Good afternoon, everybody. Thank you all for joining us today. Before we begin, I'd like to thank our sponsors, Thales, for sponsoring this webinar, and also to our speakers as well for taking time off their busy schedule to be with us here today. Now, the payment space is a hotbed of innovation, with many players vying for a piece of the action. A recent report by Google and Temasek said that the Southeast Asian digital payments market is predicted to hit $1 trillion by 2025. Even our own fintech maps, which we compile all the fintech companies that operate in the respective countries, consistently we find that payments is the largest makeup of the fintech category across all these ASEAN countries. We're seeing a lot of interesting things happening, from QR payments to facial recognition payments to even kind of Black Mirror-ish kind of ideas of having microchips implanted in you for payments. And meanwhile, in the crypto world, China is already moving towards their own digital yuan, and Facebook is pushing towards Novi, which was previously known as Libra. Now, against this backdrop of cacophony of things that's happening around the space, there's plenty of great opportunities. But with these new opportunities also comes new vectors of vulnerabilities as well. Joining us today to discuss this very important subject, we have Huey, the Managing Director of GrabPay. We have Venkatesh Saha, the Head of Asia Pacific and Middle East Expansion for TransferWise. We have Simon Keates, the Head of Global Strategy and Payment Securities for Thales. We have Henri Arslanian, the Global Crypto Leader and ASEAN FinTech Leader for PwC. I have to say, Henri, just a few years back, I would have never imagined PwC having this title. So it's an interesting direction for the industry goes moving forward. So before I jump into my first question, just wanted to remind the audience to feel free to ask questions at any time. Those who have attended my previous webinars will know that, I like to keep things fairly casual. So we'll try to take questions as we go along. Now, on to my first question, which I would direct to Hui Ting first. In terms of the trends that's happening around the region, what are some of the key trends that you think will shape payments in Southeast Asia?
Sure. Thanks, Vincent. First of all, thank you for having me here. I'm very glad to be speaking to the a large audience. I understand it's been quite a popular event so far. I would say that perhaps I share three key trends, and then I think importantly also to share how Grab has embraced this new normal to support our customers and partners. So as I think Vincent, as you mentioned, that the pandemic has definitely accelerated the adoption of digital payment, as this payment mode seems to be a more hygienic way to pay. And we believe that this trend will continue to stay, as 75% of consumer polls in Asia Pacific said that they will continue to use contactless payment methods even after the pandemic. That's one. And the other trend that we definitely believe that will be here to stay is working from home. Will definitely be here to stay. Travel, retail industry will take a long time to bounce back to the pre-COVID level. So, and also as you can observe, even in Malaysia, right, despite the opening up of the economies, consumers are really not rushing out to the shops and malls. So many retailers are still affected in a big way. So online shopping, definitely, especially for food, essentials, groceries, will be here to stay. So for businesses who are slow to adopt, they may go belly up. This is a huge concern. In fact, in Singapore, according to the Federation of Merchants Association, which represent about 20,000 merchants in Singapore, they actually predicted up to 20 or even 30% of the moms and pop shops may go belly up in just 4 to 6 weeks if the business continues to stay shut. So this is very worrying sign. And the third trend that we observe is there's a convergence of digital payment, social media, and e-commerce. We've seen many merchants turn to social media to sell their products and services to diversify the income stream. So against this backdrop, right, how has it impact or some of the maybe interesting trends that we have seen happening to Grab as well, right? So obviously, number one, we've seen double-digit growth in transactions made by GrabPay within the first few weeks of social distancing measures. So tremendous adoption. Obviously, we've seen that in our platform, and cashless penetration also has gone up across the region to about 70% of our user base. And in Singapore, cashless penetration within our platform actually has gone over to 9% of our user base. We are seeing more hawkers going online, going cashless, and GrabPay is currently the most used e-wallet in terms of transaction value in hawker centers in Singapore. But of course, we also heard that Malaysia, especially Penang, would want to be the first state to go cashless, and we would love to support Penang, which is my hometown, to become the first cashless state in Malaysia. There's just other couple of interesting observations as well for GrabFood. We've seen 30% growth in terms of first-time cashless users. And the other interesting development across the other Southeast Asian markets, example in the Philippines, right? I think last week the government just reopened their economies, and they have mandated that 100% cashless for ride booking. So it's very interesting development across different countries in Southeast Asia.
Well, I think that's some positive and some negative over there. I think the numbers in terms of those who would go belly up it's a startling number, and that's something we should all look at as well. So maybe we can next have Venkatesh to comment on what are some of the trends that you think will shape the payments market in Southeast Asia.
Thanks, Vincent, for having me. For those of you who don't know TransferWise, we are a technology company that's trying to solve the problems around foreign exchange. So whether you want to send or receive money across borders, store money in different currencies, and then spend that money again, whether it's online or at a physical store using a card product, we service all of this. We launched the remittance product in Malaysia in November last year, and we are continuing to work towards bringing the rest of our product suite to Malaysia. In terms of trends, I echo all of what Tyng said, certainly around the short to medium term. I think something else that we are also seeing is really the increased regulatory interest in transparency in financial services. So the sector that we work in, which is foreign exchange, we've seen regulators in the European Union as well as in Australia start to look at what the challenges are. And in most markets, if you want to send money from one country to another, you still have to walk up to your bank branch, fill a form. You don't know how much you're actually paying for the service, and you don't know when the money reaches to the other end. And that's kind of the problem that TransferWise has been trying to solve. But we also believe that increased transparency, certainly around the pricing of foreign exchange and remitting foreign exchange, is very, very important. So Europe has set the standard for this, and we'll certainly see more of this happening in the rest of the world, and certainly in Asia Pacific as well. I think the second thing that we are seeing is the current situation notwithstanding, I think the trend of globalization is here to stay. So more people than ever are traveling, are living and working outside of their home countries, and they need to continue to be connected, not just when it comes to being connected with their families or communicating with them, but also economically and financially. And so the need to be able to move money around the world cheaper, faster, better, more transparently, I think is more important than ever.
Thank you for that, Venkatesh. Next, maybe we can have Henri commenting on what you think are some of the trends that will shape payments in Southeast Asia. Henri, you have the floor.
Awesome. Thank you, Vincent. And for everybody at home, thank you very much for joining in to let us share our passion of the future of money and payments with all of you today. No, obviously, there's a lot of things I think that was just mentioned right now, from how people are going to work to the situation of companies to actually cross-border transfers. I won't repeat them, and I agree with all of what was said. But maybe the one I'll say that personally I'm really excited about and really keeping a big eye right now is literally the future of money per se. You know, over the last couple of years now, we're realizing with the COVID-19 situation is people don't want to touch paper bill anymore, because obviously people are afraid it could actually transmit the virus, and obviously has a lot of limitations as well around the world. I mean, we're seeing right now in the US where the IRS is sending 100 million checks to people to provide them with their stimuli money, which is obviously a bit embarrassment in 2020. The one thing I'm really focused on right now is really how we're going to use digital currencies when it comes to the future of payments and future of money. You know, and the big area on there, I would say if there's one that I pick, is really what's happening with central bank digital currencies. You know, if you're a central banker and you love Bitcoin, I mean, you're crazy. It's a bit like a taxi driver being excited of seeing Uber or Grab come in their market. But obviously, central banks have realized over the last couple of years that there's a lot of benefits of digital currencies that they can use themselves as well, from better policy monitoring to better traceability and so on and so forth. And obviously, Libra catalyzed this on top of the agenda. And today, 80%, 80, of central banks are doing some kind of research on this topic. And really, the last couple of weeks, we've had groundbreaking developments on when it comes to central bank digital currencies. I mean, we've had obviously central banks like Hong Kong or Singapore and others, Thailand recently as well, work on the topic over the last couple of months. But the last 3 months, we had the banking, even England, really come up with a very powerful consultation on the topic. We had 2 weeks ago, the Dutch central bank, really one of the most innovative documents we have in the space. Last week, in the US, we had the proposal of a digital dollar that really brings the conversation forward as well. So really, that's one of the big conversations I'm following right now. And of course, if this is a topic you're following, all eyes are on China. China confirmed 2-3 weeks ago that it's going to launch its pilot for its DCP, a digital currency electronic payment, which will launch a pilot in 4 cities, in Shenzhen, in Suzhou, in Chengdu, and in Shongan, which is about 100 kilometers from Beijing. And this is going to be the first G10 country who's actually going to experiment with real live pilot of a central bank digital currency. And this is super exciting, not only for the future of payments, not only for the future of money, but also for the future of society and our well-being. And that's super exciting.
That's really interesting, and thank you for bringing that up. That's definitely something that I'd like to dive a little bit more into later, because the whole concept of central bank-backed digital currencies really put into question the concept of money itself, right? So that's something interesting for us to really dive into. In the meantime, I would also like to hear from Simon with his viewpoint from the security perspective, what we should be concerned about, what kind of new vulnerabilities are brought on by this kind of innovations that we should keep an eye out for. Simon, you have the floor.
Thanks, Vincent, and again to echo everyone's comments earlier. Thanks everyone for tuning in. It's great to be on this platform, and thanks for the panelists for taking part as well. I guess just to start off with, it's really hard to follow to follow up here, because how can I mirror that kind of excitement through over the screen here? But especially when talking about security. I guess, we're seeing very similar trends happening in Europe, and I'm following some of the trends across the world, from South Africa to Turkey to North America, with regard to pickup of QR codes, alternative payment methods, and, on one hand, moving away from cash, and then on the other, moving away from traditional card payments as we know them today. I guess for me, the biggest thing with all of this is, as we move away from the very regulated, very regimented, if you like, credit card world, we move into a world that doesn't have as many really then ripe for attack, and ripe really for having new vulnerabilities that we're unaware of, that hackers will or attackers will seek to exploit. We see this happening all the time, really, as we developed. Started using credit cards, this became an immediate area of attack for criminals. And as we started to strengthen the way that we use credit cards with things like chip and pin, fraud immediately moved then to e-commerce. And again, we've seen then how we've introduced things like 3D Secure and other mechanisms to try and strengthen e-commerce with credit cards. To move to these alternative methods now, they will become the mechanism of attack. One of the big things that we're seeing in the UK is what's known as automated push payment fraud. And this is where we're using the real-time payment system within the UK, faster payments, to facilitate many of these alternative payment methods. Automated push payment fraud really gives focus on the ability of hackers to socially engineer consumers to send money to an account different than the account that they wish to send the money to. Sometimes this is very low level, where I might compromise a school's email account and send an email out to all parents saying, can you pay your latest fees to a different account than the school's account? And this might be in the hundreds or thousands of pounds. But when I can take over or compromise the email of an estate agent, I can then rank this up to tens of thousands of pounds per individual, leading up to, I think last year's statistic was about 500 million pounds lost via automated push payment fraud. So I guess the point is here is, as we move to these new mechanisms, as we start adopting things like QR code and moving away from the traditional payments, is to make sure that security is kept front of mind with all of these solutions, and part of the solution, not an afterthought, that we've seen for so many years. So I guess, Vincent, that's my big takeaway, is keep security front of mind.
I think that's a very important point as well, because like you said, security is often an afterthought instead of being baked in from the start, right? And I think an important thing is that we should also start thinking about how to include security as a feature, because I think there's a lot of concerns around privacy and how do we think about building a security system that's also convenient for the users as well. So I guess, when it comes to security experts, that sometimes when you guys speak, they always scare us into a lot of these kind of things. So what is an important subject for us to talk about as we move forward. I wanted to bring it back a little bit to the central bank-backed digital currency earlier. I think last year when TransferWise launched in Malaysia, I had a quick chat with Tawet, and I was asking his thoughts on whether or not he feels DLT, crypto, blockchain would kind of disruptors like TransferWise, right? So at that point of time, I think Tawet's view was, the systems that's currently available that's outside of blockchain and DLT is efficient and sufficient. He doesn't see it as a major shift that TransferWise wants to move into. So maybe I want to direct it to Venkatesh to see whether that's still the stance of TransferWise. And then after that, I would like to hear Henri's input on how these kind of CDBCs can impact companies like TransferWise. Venkatesh, you have the floor.
So I think, Vincent, you've summed up how we think about alternative currencies or digital currencies, as you may call them. I think for us at TransferWise, it remains about what is the problem that we're trying to solve, right? We're trying to make moving money across borders or storing money or spending in foreign exchange cheaper, faster, better, more convenient. And our belief is, at least today, the existing infrastructure that is there can be made more efficient in order to be able to solve this problem. But that doesn't mean that we're not keeping an eye on any of these new technologies, and as and when we see them being more ubiquitous, being more widely used. But I think for us also, more importantly, gaining more regulatory acceptance, which, as Henri mentioned, is slowly happening. I think, yeah, the world is open. We can see how to move forward then.
Yeah, and just to add on this, I think there's two things to look at, right? So just arrange my screen. I mean, it's a debate that everybody comes up, and actually, I'm going to publish soon an interview. As I think many of you follow some of my videos on LinkedIn and Twitter. I'm going to publish an interview with Christo, the founder of TransferWise, where actually he says that the view is that they do not believe they need cryptocurrencies. I have to say I disagree, and I understand, but also disagree a bit with that argument, because if you look right now globally, even the central bank digital currencies, many of them have looked at DLT, and some of them said we do not need DLT. I mean, for example, the latest Dutch proposal that says maybe we don't need DLT. If you look at the latest US proposal last week, they actually say there's a lot of benefits that's worth considering using DLT. But I think there's a couple of benefits that we have with, let's call it DLT or blockchain when it comes to central bank digital currencies that are quite important. I'll just mention, let's say, one or two of them. One of them is the benefit of having what there's in central bank digital currency. we always have this debate between account-based and token-based. So to keep it very simple, account-based is a bit like your account at the bank account, where there's somebody keeping the ledger, and token-based, it's a bit like actually money, where there's whenever I give to somebody whatever owns it, the value is in that asset. One of the benefits we're trying to look right now is actually if we can create a tokenized form of central bank digital currency, and we'd actually do the same thing as we have with paper bills, for example. And that's one of the benefits that we have the ability to do with blockchain technology in a digital way to allow actually payments transfers to happen. Albeit, I would say that often there'll be probably maximum amounts that would happen in a tokenized version, obviously to reduce the risk of money laundering and so on and so forth. But I would say probably the most exciting thing we're having on that front is what we call programmable money. So obviously right now, if you're a central banker, the way the monetary policy is done is obviously with interest rate, and right now we're going through the biggest wave of quantitative easing in the world. A lot of the monetary policy is done using the traditional, say the member banks who are part of the central bank network. One of the benefits potentially that we can have with central bank digital currencies are programmable money. For example, if I want to do quantitative easing, I can literally do it at the currency level if I wanted to. And that really makes a more direct impact of my monetary policy. And we're seeing that as well. If you look at so this is one of the examples of what we have. There's others like atomic swaps for transfers and a smart contract type of thing. But I think this is something that's important to understand, and that's one of the big debates right now going on. I would say it's very unlikely that the first central bank digital currencies will have many of these features. But I think it's one of the big benefits that we have that is not necessarily as easily obtainable. Although that I agree that we can have a lot of the benefits with firms like Transfer. I'm a TransferWise client, by the way, when it comes to cross-border payments and stuff like that.
Well, thanks, Henri. I guess now I have to convert Tyng and Simon into being TransferWise users as well.
Now would be
Sure,
the
we'll
best
look into that.
opportunity to do so.
Sure. We'll look into that.
I have yeah, that's pretty cool. I have a few more questions, but let's take some questions from the audience. We have a question here from Joey Alarila. I hope I'm not butchering the pronunciation. So Joey is asking if you guys see COVID-19 as sort of a catalyst for cashless payments. I think most would agree the short answer is yes. But do you see it sustaining after COVID-19? Anyone want to input on that?
Let me open with a comment that I found quite interesting. I saw in the news just the other day is that the UK government, in fact, is worried about the decline of cash, and they've actually launched task forces within the UK to try and minimize the effects of the growth of cashless. I'm mixing around all my terms here, but yeah, basically we are seeing that very much happening within the UK, but the government is almost against the idea, and they want to make sure that we don't enter an entirely cashless society. I guess for a couple of reasons. Most obvious maybe is that it becomes difficult for certain sectors of society to manage lives without cash. So I think this does need to kind of remain a bit in people's minds that certain parts of the society need to operate with cash notes. And so, yeah, I wonder as well as to, especially in Southeast Asia, how that fact comes into play. Is that something that's also a concern?
I'd like to add to that point. I think I mentioned early on in my opening to say that cashless is definitely here to stay, because in Asia-Pac, if you poll the consumers, 75% of them says that they will continue to use digital payment mode even after the crisis. And with that, we also observe that e-commerce or online shopping is here to stay, and cash is usually not accepted online. So definitely we will see that trend to continue. I think, however, we definitely see that there will be a segment of users, especially some of the moms and pop shops, they are not so digital savvy. We need to help them to get online. And also there's certain segment of the consumers, maybe the elder, the senior citizens. We also need to ensure that we educate them so that they are not left behind. So I think we have been looking at how do we ensure or actually help moms and pop shop to come online I think a few things that we looked at was around the education. So as our merchants told us that they really do not know how to sell the stuff online. So what we've done is we curated a list of what we call the Grab's store online store builder, integrated with GrabPay as an e-payment capability, and then we connect with our merchant to at least they know where to look for help if they like to start to go offline to online and to sell and collect payments online as well. So there are a number of initiatives that we're looking into to ensure that the micro SMEs and the more senior folks are not left behind in the digital economy.
I think that's a solid point as well, because at the end of the day, wow, those of us who are digital natives, we like to say, let's go cashless, let's get rid of cash, which is a great convenience. But there are also a lot of people who are still on the other side of the divide, right? Even in very advanced economies in China, where cashless is a huge thing. I recall reading a story about a elderly Chinese man who's like, why aren't you accepting my yuan? Because my yuan is legal tender as well. So I think that's some consideration that we need to have. But naturally, cashless has been largely accelerated. Even the chicken rice store near my house these days takes e-wallets as well. So that's one great thing.
I think,
Yes, Henry, you have something to add? Go ahead.
I think it's a topic that I think is very important that we have as an ecosystem, as a community, we need to discuss, because obviously it has a lot of ramifications. For example, for those of you who follow my weekly newsletter, I had a post on this 2 weeks ago, where, for example, in Europe, the ECB, the European Central Bank, recently said that in normal conditions, consumer transactions in the Eurozone are made in cash like almost 75% of the time, especially countries like Spain and Italy are way above average. The problem we're having, I think there's 2-3 things we need to keep in mind. The first one is financial inclusion. I mean, even if you look at developed countries, you look at the US today, total population of the US, you have 7.7% of the population that is unbanked and almost 18% that is underbanked, right? And in many cities like Detroit or Miami, up to 20% of households don't have access to bank accounts. So actually, if we move to digital payment, and this is a problem obviously we have around the world, and we all know data in Asia as well, we need to consider the financial inclusion element very, very, very closely. The second thing is also confidentiality, data privacy. One of the benefits with digital payments is obviously it's easier. I can track my expenses, but there's some transactions people may want to do that they don't want other people to know. Some of it is for personal reasons. Maybe I want to buy something I don't want my wife to know, or my wife wants to buy something they don't want myself to know. And we all have certain transactions like these, let's be honest. But second, is also so I think that's one consideration we need to have. And second is really when it comes to money laundering and effects like that. I mean, today, just look at the U.S. only, over $50 billion spent to fight money laundering. And despite all our efforts, we're able to capture less than 1% to 2% of laundered transactions. At the global level, according to the World Bank, it's between 5 to 7% of GDP is actually let's call laundered transactions, dirty money. One of the benefits we're going to have with central bank digital currencies, digital payments, is to, for the first time, we have a fighting chance to bring down and try to tackle this big issue. So I think we have to really weigh these two options where we have these policy decisions that we can benefit from, but at the same time, we should never forget the financial inclusion element. And that is a very serious consideration we need to keep in mind. And you mentioned China is a great example. Again, it's very difficult right now. As you know, if you go to China and you don't have a WeBank or Alipay account to actually function in your day-to-day life. So I think this is something we have as members of the fintech ecosystem, let's not forget from a policy perspective.
Well, Henri, I'd love to get your shopping list, certainly, for what you're going to be using crypto for. But on a slightly unrelated note, I think for cashless to truly happen, continuing with the policy intervention bit, we also need to make sure that there is, not just in Southeast Asia, but across the region, a proper framework that allows for eKYC, for digital KYC, because there's no point in going cashless if you still expect businesses to show up to your bank branch with a bunch of documents that they would need to give you and still have to interact with the other person. So we've seen a number of improvements the last few years in countries in Southeast Asia on this, but there is still some way to go.
And maybe, Vincent, if I just jump in there to expand on some of those points, I think Henri mentioned a few things about policy, about regulation, and I think this as well comes in from the security side of things. That as we move to these alternative digital currencies, or just really alternative ways of making payments, that we need some regulation in these areas with regard to security. Especially as they become more part of our critical national infrastructure. That's not to say that cash and the way that we're doing things at the moment is the best way of doing things, because we do have fraud like money laundering happening away from just pure technical attacks against these systems. But as they become more digital, the attacks will move to becoming digital, and that's where we need the regulation and the policy in place.
Thank you for that. Do you think the regulations that are currently in place is sufficient, or do you see any areas where there are gaps in regulation to protect from this vulnerability, Simon, on that note?
So I'll talk from a European point of view, at least to begin with. I think the regulations that we have in place relating to digital or alternative payment methods, I think are a bit lacking. We have the revised Payment Services Directive, PSD2, in Europe, which has caused or required that banks provide APIs to allow for third parties to integrate with them for account aggregation, but also for payment initiation. And there are requirements within this regulation that say that customers need to be strongly authenticated. But it doesn't go down to a level of sufficient detail, I think, in terms of how those things actually happen. The other is, as well, from a European point of view, when it comes to privacy, again, to Henri's point, thinking about the data that we have now or will have as we become more digital citizens, is how do I control that as a citizen myself? Who has access to it? And GDPR, the General Data Protection Regulation, again, goes to some way to achieving this. I think from the GDPR point of view is that they do have security in mind when it comes to protection of that data. They say that encryption can be used to ensure that data cannot, or if data is leaked and it's encrypted, then you don't have to disclose that breach, for example. You can use technology like tokenization to mask the data, again, to allow for analysis of it, but without exposing the actual information behind it. So there is good regulation behind the scenes here, and at a regional level, we see this coming in, and I think that's really where it needs to come from. It's all very well if it's market driven and each individual company is tackling that regulation or sorry, the security and privacy from their own point of view, but we need to do it holistically across all of the different segments of that digitization journey.
Thank you for that, Simon. So I'd like to kind of take a step back and have us all think about, because there's two ways to approach something, right? Some people, they create a solution and find a problem, and some people find a problem and create a solution. And I just wanted to ask the panelists, like, what are some of the most pressing problems that you see in the payment space right now that needs to be solved? Anyone is welcome to take that question. Henri, you'd like to take the question?
Sure, I'm happy to take it. Maybe I'll focus on the digital currency side, and I'll let the panelists cover the traditional payment side. Actually, you mentioned before regulations. I would argue in the digital asset space, actually, it's probably the only vertical of the financial services where the industry was lobbying for more regulations. And today, I have to say, fun fact, according to Cambridge University, only 5% of regulators around the world do not have somebody working on crypto assets internally. Only 5%. I would argue that in my personal experience, the average regulator that I speak with is way more knowledgeable on digital assets than the average financial services professional. Even in the region here, if you look at regulators in Singapore, Thailand, Malaysia, Hong Kong, they're very knowledgeable when it comes to crypto and digital assets. So I think that's one thing that I think we always underestimate. And I would argue the regulators do not get the credit they deserve for the good work they've been doing in this space. The one area for improvement in the digital currency space that I'm really spending more time on right now, it may sound very stupid, but it's actually tax. It's very good to have regulations, but we need to know how you're going to tax such transactions. And today, we just had, a couple of weeks ago, we had Singapore came out with some clarity on how to tax digital assets. We had Hong Kong do it a couple of weeks before that as well. We're really at the early stages of understanding what is a taxation that applies to it. Let me clarify it very clearly. If you think you're trading cryptocurrencies and you think you're in La La Land, you're not going to pay tax for it, I mean, you're wrong. And for sure, you will get caught one day. But I think it's important that as policymakers, we fix regulations. Now, central banks are working on monetary policy using digital assets. We need to have tax clarity, and that's very important for the future of money using digital assets.
You know, it's as they say, right? There's nothing that's certain in life but death and taxes. And I guess it's the same in the crypto world as well. You can't escape taxes. Hui Ting, from Grab's point of view, what are some of the biggest problems in the payment space you're seeing, and what is Grab doing to address some of these problems?
Yeah, sure. I would like to think about it as not the biggest problem in payment, but what is the biggest issue, pain point that we're trying to solve in this unprecedented crisis, right, for consumers and for our partners, including the merchant. And part of it could be payments as well. The pain points would come from payments. So example, right, in this situation, a lot of people are working from home, so they can't go out and shop and to buy things in person. So I think what we've done is to ensure that, example, we roll out our Grab Mart very quickly this year. So started in March, we expanded our Grab Mart, which is a Grab delivery services for people to order the daily necessities items through our Grab Mart platform. And with that, within a couple of months, we have 1,500 merchants coming on board, and that gives further convenience for consumers to shop online and pay online. That's just one of the pain points, right? And on the merchant side, I spoke a little bit about our, our priority is to help our merchant partners to survive this crisis, really, because if they don't, it's just going to be very, very tough for them. So what we've done is to look at what are the pain points for them to go online and continue to sustain the business. So one thing we talked about is this merchant support program, where we ensure that they know exactly where to find resources if they want to go online, and we integrate the payment solution in. Example, if they want to go online, the store builder that we partner with already integrated the payment solution for them, so they just have to go to one place, and hopefully they can go from offline to online in days. That's what we hope to achieve, right? And we also have heard from a number of merchants, small merchants, they just like to sell things on the social media platform, right? So how do we solve the pain points in terms of payments and for them to ensure they can go online? So what we've done is by listening to their requirement, we actually roll out what we call the remote payment link, so that they can sell, and more importantly, to collect payment by sending this remote payment link through a social media platform, example through a Telegram, WhatsApp, etc. So I think we would try to address it from that perspective instead of solving, let's say, a specific problem, but more a customer or a merchant problem. And if payment is part of friction, we'll solve for that as well.
Thank you. My sense from what you're saying is that that there needs to be sort of a more holistic approach in terms of solving problems, instead of looking at payments as an isolation, right? Because there's many dimensions to the problem that maybe payments in itself cannot solve it, but with other things in tandem with payments can help to address some of these key issues that we're facing during this crisis. Venkatesh, from TransferWise viewpoint, what are some of the biggest pain points that you guys are trying to solve at the moment?
So for us, I think it's really about the legacy financial system and where we go today, right? So the current situation has showed us the need for cheaper, faster, and more convenient payments, particularly across borders. But I think the way the traditional financial system has been built is really focused on domestic use. And even though we've now had a number of years where sending an email is effectively free and instant, for some strange reason, moving money around the world is still very slow, very hard, and very expensive. I've read reports where it shows that consumers and small businesses particularly, they account for something like 20% of all transactions, but pay 80% of all the fees that are associated. So that's really, I guess, the core of what TransferWise is trying to do and what brings me and my colleagues into work every day. How do we make this better? How do we make it cheaper, faster, and more convenient, so that people can continue to kind of live the global lifestyles that they would aspire for?
I guess my one thing that I'm curious about with the whole COVID-19 situation, are you seeing the number of remittance going down, or would you say it's largely the same in this current situation?
So I think for us, I think it's really too early to say, what the long-term implications of this are going to be. I think our volumes remain healthy. We are digital as a company, and we've gone from something like 14 offices now to 2,200 offices, which is the home of every colleague that I have, and continue to be able to work as before. So I think we remain cautiously optimistic.
Thank you for that. And from a security viewpoint, Simon, what keeps you up at night at the moment? Although it's 6:40 in the morning there.
Exactly. 7:40 actually. So yeah,
right.
I think just to everyone's point is as we move to these more digital platforms, the thing for me is that it's really the on two sides. One is the growth of data. Really, and it's especially as we move from the highly regulated and I would say mostly secure traditional banks into these new mechanisms of facilitating payments. There is a ton of information stored within these platforms that is now seriously vulnerable, and we're seeing attacks with large organizations, mature organizations that you would expect to have decent information security management systems in place, losing vast amounts of data, and highly sensitive, names, addresses, dates of birth, as well as credit card numbers, payment, and payment information. So I think that's one of my biggest concerns. That's what keeps us as a business focused on fintech, is that even as we move away from the regulated traditional banks into these new places, is the protection of that data. And I think, as I said earlier, GDPR really identifies encryption as a recognized mechanism for protecting that data against cyber criminals. And for me, the thing with encryption is that it's not really a silver bullet. It has to be done correctly. You can't just deploy it and expect this to solve all of your problems. It is a highly complex area, and it's not solved very easily, not least because if I can undermine the encryption or get hold of the data before it's encrypted, then I lose all the benefits of encryption in the first place. MageCart is a great example of this, that British Airways as an organization was attacked last year or the year before within their website by attacking the supply chain of the JavaScript onto their website. So capture that PAN and CVV before it hits your backend system, before it's tokenized or encrypted. So it's really something you need to think about. So encryption of data for me is one of the most important things that you can do, but to do it correctly and to use tools, obviously, like what Thales has in terms of our transparent data encryption or our tokenization systems within the Volumetric platform to achieve that, and to make sure that it's done correctly within the policies and guidelines and security policies within your organization.
Thank you for that, Simon. Now, I'd like to take a question from our audience. We have Mark over here who's asking, basically, if central banks issue sovereign currencies and companies can own and manage directly, what is the purpose of the bank? I guess this question would be more directed at Henri. Henri, do you want to take this?
Sure, of course. No, happy to take it. And thanks for your question, Mark, on this. Absolutely, the question you raise is central on top of mind of any policymaker. So I would say there's a couple of areas to look at it, right? Let's right now, right? Obviously, today, if let's say there's one of the big risks that we have with a central bank digital currency is that in the event of financial instability, it may accelerate the run on the banks. So, for example, imagine today if I believe my bank will go bust, what can I do? I mean, obviously, one option is I go to the ATM and I withdraw as much cash that I can. But of course, there's a physical limits of how much cash you can withdraw and how we can store it, right? And there's obviously, I'm talking about the banking system you believe has some certain problems. This is exactly for this reason that for a big concern with having central bank digital currencies is, could it accelerate a bank run? Because although there's a physical limit of how much cash you can keep, if we move to central bank digital currencies, there's no limit to how much you can actually store on a digital wallet. This is why I expect most of the conversation and the initial pilots that go on with central bank digital currencies will have a limit. So the best example of this is what the Dutch proposed 2 weeks ago or 3 weeks ago. I'm actually amazed there's not more people, especially the media, talking about the Dutch proposal. I think it's very Dutch. They didn't market themselves very well, maybe, but it has a very interesting proposals. For example, their proposal is that they limit up to, I believe, it was 4,000 to 7,000 euros, the maximum amount that people can use in central bank digital currencies. And actually, the argument is that actually it's only replacing the amount of physical cash that is actually being taken out of the system. So that's actually one thing to note from that perspective. The second thing I would say is often for the banks directly is that this will have a very direct impact on the cost of funding for banks. Because today, when you deposit at a bank, as we all know, banks work on this fractional banking, and every bank has a reserve at the account of the central bank. If people have less deposits at a bank, the banks will need to borrow on what we call the wholesale market, and that actually increases their cost of funding. So there's a lot of implications there I would mention. The one thing that I'm really following that I think anybody in fintech, or if you're interested in the future of money, you need to keep an eye on. It's a very early stage right now, but it's what we call decentralized finance, which is there's a number of tools right now that are basically operating without central counterparties. And it's very interesting. I mean, recently they just passed the $1 billion mark. It's very little. If you think about it in the big scheme of things, it's nothing. But from an intellectual perspective and from a technological perspective and ideas perspective, there's some very interesting ideas now coming up through the decentralized finance world, as well as solutions that are being offered now for people who have digital assets and how to use it. They're kind of replacing banks. So it's very interesting, that conversation. I'll stop it here. And I think one thing also to keep in mind is Libra as well, and the impact it may have on central banks as well. But we can discuss that separately.
I think one of the challenge about decentralized finance, Defi, is that finance in itself is a very difficult topic, and then you add technology as another layer. So I think that a lot of people find it, wow, this is really inaccessible. But I've been tuning into your regular Keep Crypto capsule in LinkedIn. That really is quite helpful. So if you guys are looking for like short information on a weekly basis, was it, Henri?
Yeah, weekly basis
would
on
be
LinkedIn. The newsletter is every Saturday on LinkedIn. So LinkedIn is the best channel.
All right, that's pretty helpful. So we have another question over here. This is from Sin Hin Teo. He's asking, there are so many e-wallets in the market. He's wondering if that will see consolidation soon due to the pandemic. And I guess part of the reason why there are so many e-wallets is that I think there was a report that stated from BCG that there were maybe 500 million users in 2017. In 2019, that user base grew to like 2.1 billion. And I would imagine but in 2020, those numbers are much, much larger. So I'm wondering if you guys think that, what your thoughts are on whether or not you will see consolidation. Maybe we'll direct that question to Tyng, since Tyng is operating an e-wallet across several markets. Tyng, you have the floor.
Sure. Hi. Just now, I think my mic was I had some problem. I think I only heard the last part of the question. Is like with the too many. Can you repeat the question one more time, just in case?
Absolutely. So the question is, there are quite a number of e-wallets in the market, and with the pandemic that's happening right now, do you see that there will be a consolidation soon?
Yeah, I do think that a number of areas we should look at. I think in this crisis situation, right? I would say that the e-wallets that's going to survive better would be those that have very real and sticky use cases to continue to engage users. So I would say that if any e-wallet players will continue to have a very solid use cases, continue to evolve. I just give an example of, we used to only have transport and food. Immediately we knew that people are shopping online to buy buy the daily needs and grocery. We immediately launched our Grab delivery platform as Grab Mart. So I think we definitely see a lot of a reason for e-wallet players to ensure that they have sticky use cases. And the other one is that with this situation, this crisis, right, I think a lot of e-wallet players will not have the kind of promotion, the marketing budget they used to have. So they need to be really sort of really optimize the cost structure to ensure that they have a cheaper, faster way of acquiring the customers, leveraging on the existing ecosystem. So I think this is the other factor that you'll see, that if any e-wallet players, they used to sustain the usage by spending a lot of money, that day is over. So I do see that with this couple of with the increased pressure as well as drying up of certain funds, I would see that there will be some consolidation.
I think to your point, Huey, even before the pandemic, there were a lot of conversations about consolidations in the market, particularly I think during the early days in Malaysia where e-wallet started becoming a thing. I think we're getting like one press release per week about a new e-wallet at one point in time.
Yeah.
So definitely consolidation is something that even we think is on the way as well. So before we move on to the next question, does anyone else in the panel have anything to add to this conversation?
Yeah, Vincent, if I could, let me jump in there very quickly. I think
ahead,
something Tyng said was, it's really about convenience, and it's about meeting the needs of consumers. Again, just to think of this from a security point of view, is users will always go after the easiest solution, the solution that provides them the greatest simplicity and the least amount of friction. Unfortunately, I think from a security point of view, we tend to get in the way too often. And so where e-wallets might have really great security and great policies in place like two-factor authentication and really focus on the security from a fundamental point of view, the ones that are the easiest are the ones where the consumers will end up, and that's the one that actually then becomes the focus of attack. So again, just back to that point, I think it's think of things from a back to basics point of view, that when you do end up having lots of data, you will become the focus of attack. So from a GrabPay point of view, and from TransferWise, and even from a cryptocurrency point of view, I think is, what is the baseline of security that you're aiming for in terms of meeting the requirements of your users? You really expect everything just to be secure, but then how do you also make sure as an organization that you're meeting really those basic needs of security?
And I think that that's especially important considering the fact that a lot of ASEAN countries are looking into virtual banking regulations, right? Then there's more touch points between a lot of these financial services startups and the end users and their money as well. So that's an important consideration. So does anyone else have anything else to add before we move on to our next talking points? Nope, all good. All right. So time does fly. Actually, I didn't realize it's almost been an hour that we've been chatting now. That's the challenge with these things. There's always so much to talk about. Actually, even with individually, each one of you, I could probably chat an hour each. But I don't think our audience have all day. So I'd like to kind of close off and maybe have each of the panelists to share some closing thoughts. Maybe we'll start with Venkat, and then Henri, and then Simon, and then Huey. Venkat, you have the floor.
Well, maybe I'll use this opportunity to address one of the questions that you had sent to me, Vincent, and you'd asked me about what is sort of the role of banks and fintechs? Is it banks and fintechs, banks against fintechs, and how do we sort of coexist and work together? And I think for us, it's really about continuing to work together. And for us as TransferWise, it's about understanding what we are good at and leading us to have a more symbiotic relationships with the banks that we serve. So for example, we now have a banking API where banks can hook into and enable the same fast, convenient, and cost-effective transfers that a customer who comes to TransferWise directly can have. And whether you're a digital bank like Monzo in the UK or a more traditional financial institution like a credit union that we work with in the US, I think we're now seeing that this increasing awareness that banks have of the value that fintechs can bring to them. And I think that will only continue moving forward.
Thank you for that, Henri.
Yeah, maybe just on closing notes. First of all, just thank everybody who was listening to us and allowing us to share our passion of the future of finance and money. Two things I'll mention. One of them, this is the most exciting time in the history of finance, I believe. And I think this is the period we're going to right now. Our kids, grandchildren will look back and saying, wow, it was such a game-changing moment. But the message, I think, for all of you, and this is what I've been telling all my students, is really this moment, the post-2020 world will be very different. Please, when you're in quarantine or you're at home right now, make sure you're upskilling yourself. Make sure you're going on these MOOCs. Make sure you're listening to sessions like these, and you are better prepared to face the post-2020 world. Please do not waste your time watching Netflix or Hulu or Tiger Kings or any stupidities like that. This is not a time to be bored. This is a time where it's a golden opportunity to upskill yourself, learn new skills that you didn't have before, focus on more of these topics that you wanted to focus more to make sure that you're more valuable moving forward. It's going to be a more difficult job market, whether we want it or not. We're seeing global unemployment levels around the world, especially for those of you who are coming out of university. So my message has always been, this is a time. There's a lot of MOOCs online. I have a course with Hong Kong University that is free. LinkedIn has a lot of courses. Make sure you're upskilling yourselves, and please do not waste this opportunity. It's a once-in-a-lifetime opportunity to upskill and be ready for the world coming ahead. And very happy, and thanks again for letting us share our passion with all of you today. I know everybody has a busy schedule, so thank you for making time for this.
Thank you. And next, Simon, do you have any closing thoughts to share with the audience?
Yeah, thanks, Vincent. I think as well, just to echo Henri's points, thanks everyone for tuning in. Thanks for the panelists for joining in. I think this has really been a great conversation. I can't believe an hour has flown by already. And especially, from my point of view, security is obviously, I wouldn't say the most interesting topic for everyone, but for me, it is hugely important, especially as we move into this really exciting time. I think the worst advice I ever got was from an ex-colleague who said, "Don't get into payments. It's dull. It's not exciting." If you could have only foreseen everything that's happened with mobile payments, all of the digital wallets, everything that's happening now. But again, I think as I think about this, I think whether we're in cloud, whether we're doing alternative payment methods, whatever we're doing, we are the focus of attack because there is money involved. This isn't just data. If I have the ability to extract value from a system, that's interesting from a hacker's point of view. So I think my message is, think about the lessons that we've learned within the traditional card payments world over the last 30 years. We might move away from traditional cards in the probably a bit more distant future as we start to adopt different ways of making payments. But we've learned a great deal over 30 years. We've made a lot of mistakes, and there's been a ton of fraud within credit card payments. But we've taken great steps to really mitigating those risks in terms of introducing regulation, like the likes of the payment card industry, imposing or providing a framework for developing security against. There will always be data, whether we're doing cryptocurrency, whether there are traditional chip cards, there will always be data, and that will always be the focus of the attack. So not only do we need to protect the framework for actually making those payments, the rails that the payments rely on, for example, EMV chip cards, whether that's cryptocurrency, but the data behind the scenes equally needs to be encrypted. And lastly, just to Henri's point, I think, unfortunately, the thing that I've learned most over lockdown are the lyrics to almost every single Disney song. I haven't had quite the time to tune into as many educational webcasts as I would have liked.
I think that's a struggle many parents can relate to, Simon. Okay, moving on to Huey. Any closing thoughts for our audience?
Yeah, sure. I would say that this is definitely a very exciting time, but it's also a very tough time for many consumers and many businesses. So while it is all of us have to embrace a new normal, and while we would like to, a lot of us would like to look at what will change, but I think it's more important to look at what are the changes will be here to stay, and be prepared to embrace those changes that are here to stay, right? So for Grab, it's definitely for us to at this time, it's even more important for us to listen to our customers, to stay nimble, and to work really, really hard around the clock to roll out solutions and services in time to help them solve, the pain points, and help them stay in business, help them survive this crisis. And that will be our priority in the next few months, or even up to 12 months. So I think the key is for us to help as many businesses to stay afloat and survive this crisis. That's our priority.
Thank you for that. That's so many learning points to digest today. That's just so many insights coming from all the speakers. If you guys missed any part of the session today, this will be available after we end this. You can tune in via our Facebook or YouTube to rewatch some of this key information and insights that our lovely speakers have shared with us today. With that, only leaves me the honor and gratitude to thank everybody for joining us today. I hope you guys had a really good time. I would like also to thank the speakers for, again, taking the time to join us today. Thank you and have a good day. Take care now. Bye-bye.
Thank you.
Thank you.